Hello and welcome everybody. Annyeonghaseyo and namaste. I'm ㆍThe. I'm chairman of Indian Chamber of Commerce in Korea, ICCK. I'm currently president of Novelis Asia, and Novelis is the world's largest aluminum rolling and recycling company, and we have 2 manufacturing units in Korea. I personally have stayed in Korea over 8 years now. So on behalf of ICCK, I would like to extend a warm welcome to all of you. ICCK is almost 10 years young. ICCK's vision is to play a vital and valuable role in the economic development and trade promotion between 2 countries, Korea and India. ICCK has a steadily growing membership base of around 65 members. We help to connect Korean and Indian businesses to explore mutually beneficial business opportunities. We generally convene ICCK Speaker Forum 2 or 3 times a year with discussion themes conceived by forum members to understand and tackle the topical issues. Whether it is updates from expert speakers, details about specific industry or economic update, or simply just networking. Our effort is to facilitate you to stay up to date with the industry developments and focus on issues affecting your area of business. Our forums are another way to help you get the most out of your membership. Now, many of our members told me that Speaker Forum allows us to meet face-to-face with experts and business peers. Unfortunately, this year, we are unable to organize face-to-face meetings, considering the current unprecedented pandemic situation. However, we thought instead of waiting for long, we would still proceed with the virtual session. And that's why this is the first Speakers Forum, online Speakers Forum this year. Today's session will give you the insights about the recent impact on the global and the Korean economy, also the current trends in the Asian automotive market, and how it has been impacted by the auto industry due to the COVID-19 pandemic outbreak. I hope you will enjoy this session. Thank you. Kamsahamnida. Jeremy, over to you.
Thank you, Sachin. On behalf of the ICCK and as a co-chair for the Speakers Forum, it's my pleasure to introduce the speakers today. As you've seen in the flyer and invitation, you're aware that we have great speakers. We wish that you could meet them in person, and perhaps that day will come again soon. The first speaker, Dr. Jong-Hoon Park, is no stranger to the ICCK or the Speakers Forum. He is probably definitely our most popular speaker to date. He's been speaking probably about once a year for the last several years and has provided very insightful economic updates for all of us. This one will be more important perhaps than some of the other economic updates in the past because it's unprecedented. But just, I don't want to put words in Dr. Park's mouth. I'll just introduce him and turn the time over to him. He's the head of Economic Research Korea for Standard Chartered Bank. He's been with Standard Chartered Korea since 2009 and currently heads its Korean research team. He provides in-depth analysis on the Korean economy to Standard Chartered Bank clients at business functions. Previously, before joining Standard Chartered Korea, he worked as a senior research fellow and head of telecommunication policy at Korea Information Society Development Institute. He was there for 6 years, and then prior to that, he was an executive vice president at SK Broadband for 4 years. He has a wealth of knowledge and experience as a researcher and as a strategist. He obtained his education from Northwestern University. That's where he received his doctorate degree in international economics and development. So I'd like to turn the mic over to Dr. Park. We all look forward to hearing your comments. And then after Dr. Park's comments, I'll introduce our second speaker, Mr. James Liu. Dr. Park, please go ahead.
Thank you, Janice. Thank you for the kind introduction, and I hope everybody stays safe and all the families stay safe. So today I'm going to talk about a bit of the global economy, especially China, Europe, and Korea. And I'm going to talk about how it has impacted the financial market, and especially how it's going to impact our FX market, because most of our clients are very concerned with the FX volatility and how the FX market is going to go ahead after the November election. So I'm not going to talk about the election impact on this presentation, but I'm happy to answer your question. If you have any questions about the bank's view about the November election in US and how the election is going to end up, whether it's going to end on November 3rd or it's going to be extended till December, and who is going to decide the US election in this year. So let's go to the economic presentation. So the first I have I handed out my presentation materials. So it has China part in the first section, how the China economy has shown so far. As you can see in page 3, M4, M5, and 6, I think you can go through it. Can you go to the page 3? So as you can see in page 3, China economy has recovered quite rapidly in second quarter. Like they have showed like a V-shaped recovery in second quarter. Most of the economies probably will show some V-shaped recovery in third quarter. So because China was hit by the virus earlier than the other economies, China could recover in second quarter. But the most of other economies, like second quarter was the worst economy, which was the first quarter of the China. So we see a rapid recovery in China in second quarter, around 3.2%. We expect like a third quarter is also going to be a quite rapid increase. We expect around 6% recovery. So by end of the year, China will be able to grow 2.5%. So considering all the negative shocks globally, China will be the only country who may record positive growth in 2020. So China recovery has been quite amazing. But if you go to the next page, page 4, China is not recovered fully. Like some regions, some industry is going to be impacted, even though they do recover. So the service industry and the regions which are dependent more service industry is going to suffer. And the regions, the industry which is more based on the manufacturing will be able to come back and recover much faster in second half. So this is going to be kind of an ongoing theme globally, like why Korea is doing better than Japan, or why Taiwan is doing much better than other economy. It's mainly because their economic structure is more based on the manufacturing than service sector oriented. So if the economy is more like a manufacturing oriented, especially if your manufacturing is oriented in the IT sector, you benefit because of the that sector the demand has not been fully impacted by the virus. But if your country is more service oriented or more domestic oriented, and especially if you are based on the service industry, then your shock is going to be much bigger than the other economies. So even in China, even though they have recovered quite rapidly than other economies, like their regions, which is based on the more service or more in a service industry is going to be impacted more. So on page 5, you can see even the recovery is uneven, even in China. So infrastructure, housing, car sales have driven the recovery, because I mean there is kind of a more or less depend on the like a human contact. But if you see like a catering, tourism, and aviation, that has been impacted quite a lot. So like a service sector has been quite impacted quite a lot. So even though China is showing some recovery, we see household income and also the employment number has not been as strong as we expected. So meaning even China will take much time to fully recover from the shock. Recently, we see the China PMI number for like October, August, and September. It shows quite improvement. So we see China's like economy will be resilient, even though with a lot of concern of a second wave. So some countries, like especially European countries, will have some concern of a second wave, but China seems like handling okay as of now. But we cannot fully guarantee it because the pandemic is not far from over yet. Now, if you go to the U.S. and Europe, you can see in page 8, all the U.S. and Europe regions are in kind of deep recession. Like usually, the definition of the recession is if economy record 2 negative growth for 2 consecutive quarters, then we say they are in recession. So as you can see, page 8, like all the economies is recording negative growth for first quarter and second quarter, which means like 2 consecutive quarters of negative growth, which is a definition of the recession. So globally, we can say all the economies are facing recession. I'm going to talk about Korea later, but Korea also has recorded 2 negative growth. So we can say Korea is also in recession. As you can see in page 9, we see the rebound activity is quite strong. Like we see some V-shaped recovery even in Europe and the US. So we see similar pattern as we see in China. But the rebound, the speed is not as strong as China, but we see the shape of the recovery is very similar to the China. So we see. We may see like much stronger in the Q3 growth in the European and the US economy. Only concern is if we are hit more like a strong second wave, then it's going to be a burden for the recovery. But as long as the coronavirus stays same as now, then we may see V-shaped recovery in other regions too. If you look at the European countries as a whole, some economy recover quite better than other economy. Like for example, Germany did much better than other like South the European countries. I think it's more or less depend on how deep the government pocket is. If the government has money, if the government can drive the more extensive fiscal policy, they could recover. But there's some economies, because of the already accumulated debt, they could not extend much aggressive fiscal policy. Then they could not rebound as fast as other economies. So always like a government, where the government's financial stability is a key or not, is when there is a shock, some economy do better than the other economy because the government has money. So I think we see the same case here. We see in page 11, like ECB and the Fed has been increasing their asset purchasing. Like they have been provided a tremendous like liquidity to the market. So through the 2008-2009 crisis, like ECB and the Fed does know you need to provide a lot of liquidity when there is a shock. So it's not going to solve like the credit kind of the credit risk, but you can solve at least the liquidity risk. So if you do not control the liquidity risk, it will go to the credit risk, and it will hurt the economy faster than we expect. So like they want to solve the liquidity problem as soon as possible, so then can somehow stop like a credit risk at the end. But it's not going to go away, but you can at least delay it, and you can have a time to do something to save the economy. If you go to the page 13, we see Korea's go to a similar pattern. Like we see first quarter and second quarter, it shows a negative growth, and which is also, as I said, the definition of the recession. So Korea is in a sense a recession, but we'll see third quarter will expect to recover much faster, and the fourth quarter we expect a recover. Continue to recover. So I expect around 0.8%, minus 0.8% growth this year, but BOK is expecting minus 1.2. If the coronavirus becomes serious, they're expecting minus 2.2. So I was minus 0.8 when the BOK was minus 0.3. So I was more optimistic than I was more pessimistic than BOK like a month ago, but the BOK changed their view. So I am more pessimistic than BOK, optimistic than BOK. The reason I didn't change my view is I think our export has shown quite recovery, and we see some signs of the positive stories like from the China, also like from the semiconductor sector side. So I want to see I want to collect more data before I change my view. The reason I am more optimistic is in page 14. You can see the facility investment and capital goods import, how the relationship shows like a very positive correlation. And if I look at the data, like our import has, especially like semiconductor, the input has been really strong for the last 3 months, meaning our export in semiconductor is going to be very, very strong. Usually when we expand semiconductor export, we have to extend the facility. To do so, we have to import the machineries from the Japan usually. So our import from the semiconductor has increased quite a lot, meaning our export is going to be strong in second quarter and third quarter and fourth quarter. Well, another reason, like we see quite strong the semiconductor recovery is some of the conjecture is front loading. Like as you know, Korea is not going to be banned to export to Huawei. So because we cannot export to the Huawei have to import Korea's semiconductor as soon as they possible. So they more or less expedite importing from Korea for recently. So that has increased Korea's export to China quite rapidly, and probably that's why Korea could recover our export for the positive for the first time in September. So like our Korea's export has increased 7.7% in September, which is the first time the positive growth since the pandemic. So was mainly driven by the semiconductor export, especially like China. So that could be the reason behind it. But still, like because of the social distancing, the demand in IT sector continued to rise. And I think that has been driving the Korea's like the semiconductor investment, and also like driving the more like a bright color of the semiconductor industry. Also, industry production has been quite show some signs of recovery. So which is a really usually positive news for Korea's economic sentiment. So we see some good news about the industry production, and usually industrial production depend on three kind of industries like auto, petrochemical, and semiconductor. Semiconductor has been quite strong. It's hard to expect a petrochemical because the global economy is more or less like impacted by the global pandemic, especially like an industry which uses a lot of the petrochemicals. So I see. It's going to be quite delayed, but the reason I'm more optimistic is our export in auto has been quite improving a lot. So that is more or less like a positive news for the auto production side. That has been driving our industry production, and also we have to see. But when I talked with some industry people, like Korean autos are still not regarded as top tier. It's more or less like a second tier car in US and European market. So when economy is hit by the shock, tend to show better performance than other like high top-notch like automakers. So that is more or less benefit kind of helping Korea's like auto sector industry probably moving forward. So that I am more optimistic because like a semiconductor and auto is going to recover in next quarter. So, and also as you can see in page like 16, you can see like the sentiment has been quite improving in Korea now. If the one concern to me is in page 16, while we are recovering, Koreans' debt level has been rising quite rapidly. As I said before, the reason the countries can recover is how deep the government pocket is. Like Korea could recover than other economy probably because our debt to GDP was only 40%, unlike other most of the OECD economies whose debt level is around 80%. So because Korean's debt is quite low, the government could spend a lot for this year. So next 5 years, when the around 2023, Korea's government debt level is going to up to 60%. So for next 3 years, our debt level is going to be from the 40% to 60%, around 20% of the increase of the GDP compared to the GDP. So which is a lot of much faster increase. And also since the last year, we see the pension, usually we have more plus in pension because we have making more money than subsidizing old people. But from the last year, we see negative growth. So like a young generation is not large enough to support the old generation. So that money, pension money will go away, will increase the government government debt level. So I am concerned with this, unless I think probably that's why if you read the Korean newspaper, like the Deputy Prime Minister Hoon is keep emphasizing the government has to be really careful about the budget balance for like moving forward. I think right now in page 18 to page 20, I have explained that even though because of a lot of liquidity provided by the central bank, we could solve the liquidity problem, but it is not. We are not solving the credit risk as of now. So if the firms go bankrupt, then it's going to eventually, because there is the activity is quite reduced because of the shock, some firms go to bankrupt anyway, then all the credit risk will come back, and someone has to bear the burden. Like that risk is not gone away. So I'm showing you because of the liquidity, the firms are still okay, but we see rising default risk. It's not just us; it's the U.S. and all over the world. So that is going to be the huge problem moving forward. When the things settle down, we have to do some restructuring, and someone has to bear all the costs we have paid. So that is going to be a big problem for coming years. While all this kind of the gloomy pictures of the real economy, if you look at the Korean KOSPI, you may wonder what's wrong with this. Like a financial market is very strong. Like everybody is buying the equity, and anyone who invests in equity is actually made quite decent money. Like so, why there is so much difference between the real economy versus like a financial economy? Because as I said, the financial market is doing well because of too much liquidity. When the Bank of Korea even lowered their interest rate by the 75 basis point, and also they are buying the Korean version of the quantitative easing to depress the interest rate. So that is all provide all the liquidity and is helping the financial market. So usually the money should be used for real market, but the money has been using to support the financial market, which is not that really positive. So when I look at this kind of the financial market gap and real market gap will continue unless we actually go back to do some the fundamental restructuring. But until then, I think I think the financial markets will like a growth is going to be sustained. Lastly, I'm going to talk about how the exchange rate, because we're very keen about the FX market. For most of our clients will be concerned with how the Korean won is going to do. If you see the Korean won, we started around 1150 from early this year, went up to the 1240 and came down to 1180 level, and now it's 1160 to 1180 level. So in some period of time, Korea won was not performing well. Some period of time, Korea won is performing better than other economy, but still like we didn't move along with other emerging market. When you look at the dollar performance, like usually we expect the dollar is actually will depreciate. Right now, we think the dollar is too strong. the reason is like because of the Fed is providing a lot of liquidity. In the meantime, the expected inflation goes up, so real interest rate is going to show the negative growth. So that it will lower the attractiveness of the investing in US. So that will kind of pulling the money from the US and going back to the emerging market investment. So we expected a much weaker US dollar, but actually we have not seen it. Like the dollar has been still resilient, not depreciating as much as we have expected. So if you see the page 25, that is our forecast model. As you can see, most of the emerging market currency is undervalued compared to the US dollar. So even though dollar is too strong, dollar has not depreciated. So we ask why, and we see the reason is because of the uncertainty. Even though the dollar is too strong, still people want to hold the dollar asset, even though they know it is expensive because they are too much concerned with the risk. So if the risk goes away, then the money will flow back to the emerging market. So far the reason we didn't see like a much like a stronger EM currency is because of the volatility. But if you look at, as I say, we are going to have a November election. There is too much uncertainty, political uncertainty or geopolitical uncertainty. So it's still like even though if the uncertainty goes away, we'll improve, but we see that some uncertainties remain. Okay, so then why Korean won is moving, showing appreciation and depreciation a bit different from the other emerging market. I think it's because in old days, like Korea is more or less like a dollar-rich country because our current account surplus is close to 50 to 60 billion dollars a year. So we have, unless if you leave it just as it is, Korean won tend to depreciate because we have more dollar. But nowadays, like even though we make a lot of current account surplus, we make around 50 billion current account surplus, but we see a lot of capital outflow because Korea, the interest is getting lower and lower. There is more incentive for Koreans to buy foreign assets. So the capital outflow is much stronger than before. So like usually outflow is bigger than the inflow. So if you leave everything just as it is, then Korean won tend to depreciate than appreciate like old days. So because of the outflow, even though like the Korea economy is doing quite well and we are doing better than most of the EM countries, sometimes we are underperforming even the EM because mainly because there is a much stronger demand from the Koreans invest out of Korea. So that has been much the reason of the Korea won behavior different from the other emerging market. Another reason is like Korea, if you see the Korean equity market, we are doing quite well. So unlike, I think up to the year, probably Korea equity market is a top 3 or top 4 outperforming the equity market in other economy. So the reason behind it is probably because we have like a lot of accumulated the money and the liquidity, but also like it's because like our IT sector has been quite attractive than the other countries like a specific sector. But who invested in Korea? It's not foreign investors. It's more or less like Koreans are invested in Korean assets. So still like foreigners has left Korea and they sell the Korean equity and they go out of the Korea. So at this current level, it's going to be hard for foreigners to come back because it looks quite expensive. So even though the risk goes away, from foreigners' perspective, the Korean market is not going to be really attractive because the current level is quite high. So even though the risk on, then if the money leaves the US, go to the emerging market, there will be limited room for the foreigners to come to the Korean market. Usually, in old days, when the foreigners leave the Korean equity market collapsed. So it was easier for foreigners to come back to Korean market, but that is not going to be the case. For this reason, we think Korean won is going to depreciate further. So our forecast by the end of the year is 12.20. So a bit different from the domestic market. Usually, I read a lot of the research papers by the Korean research firms. They're expecting around 11.50. So they expect the Korea won appreciation from current level, but our forecast is a depreciation from the current level, mainly because we are based on the outflows. But if you look at the fundamental of the economics, I think it's not because Korea is weaker than the other economy, mainly because of the flow. So I will stop here, and if you have any questions, I'm happy to come back to answer it.
Dr. Park's presentations, they're always extremely insightful, and I walk away feeling like I actually understand things more than I probably do. But thank you very much. Probably the best approach, I think, would be while our knowledge of Dr. Park's presentation is fresh in our minds, perhaps we could open it up to questions briefly. Do we have any questions for Dr. Park? Just remember
Jeremy,
to put...
I have a question. Can I ask him a question?
Of course.
Okay. Dr. Park, good afternoon. I mean, I totally agree with Jeremy, and each time I hear, I feel much more knowledgeable about it. The question that I want to ask is that I hear a lot about, V-shaped recovery, W-shaped recovery, and last week I heard something new, that is a K-shaped recovery. That means there's a dual recovery happening in US, meaning that the recovery, it's a V-shaped recovery for the high-income, white-collar people, and actually inverted V recovery for lower-income people, and they continue to suffer. Is this something that is new, or do you see that is happening in Korea as well?
Yes, I think, as I said, when I talk about China presentation, I said, the recovery, we see the recovery, but the recovery is not even. So some area is doing well, some industry doing well, some income group is doing well, some income group is not doing well. So usually when there is too much liquidity, the one who has asset tends to doing well, and the one who doesn't have an asset usually doing poorly. So usually who has an asset is usually rich people. So rich people tend to do okay, and poor people do badly. That's why, as you say, the K-shaped recovery could be the case, and I think that is going to when the things are settled down, I think that phenomena is going to be apparent to every economy, and probably that's why we need a government policy more like aggressive fiscal policy. You might remember when there was a pandemic, and in early 20th century, there was a lot of like a communist revolution, and some country go to the totalitarianism. So we see a very weird thing when the inequality the last for a long time. So we need more like a social policy to solve the inequality issue. Otherwise, we see some bad side of the capitalism.
Okay, thank you.
Great. Any other questions?
There is one question in the chat box.
Yeah, I think there was about the Fed policy, like how we see the like a Fed policy. So far, like the Fed is talking about like a yield curve control, and they will provide more liquidity if necessary. So far, it's more like a bubble kind of assurance than actually deciding the size of the quantitative easing or how they're actually going to do yield curve control. So more or less like the bubble kind of the kind of commitment. The reason they are doing it is so far like the market is doing okay. So if the market is not doing okay, then I think the Fed will step in. They will provide more quantitative easing, buying them more bond, or in the worst case, they will try to control the yield curve control. The difference for the yield curve control and quantitative easing is yield curve control is like I will buy. There is no limited kind of buying. I will do as much as buying to maintain the price. So one is a price policy, one is a quantity policy. So far, like a quantitative easing is more or less quantity policy. But if it's not working, then they will actually step in to provide the price. So I think so far it's a bubble kind of the intervention, but the reason is the economy is doing okay. So if it doesn't, I think we'll see much larger Fed action, and I think there is room for Fed to step in.
Thank you, sir. There is one more question from an Indian person in the chat box. So, Varun.
What is? I didn't see it. I just see the headline. What is the question?
So it's considering Korea is recovering so well as compared to the other economy. How will the pandemic further impact on Korean import in Korea, considering the manufacturing units will limit their investments?
I think, as I say, the reason Korea did better than like other countries, same as Taiwan, we are more or less kind of more dependent on export and more dependent on manufacturing sector. So our service sector is only like about 50%, less than 60%, but in US case is around 75% of their GDP is dependent on service sector. So economy who depend on the service sector is hurt much a lot. So Korea case, because we are more or less manufacturing based, especially IT based, I think we could do better than other economy. Our import is not doing well, but our import, especially in a facility import, in the semiconductor related facility investment has been quite strong. So that's why I am more optimistic about our semiconductor performance in second half of the year.
Thank you, sir.
Thank you.
Continue.
Any other questions? Okay. Well, with that, thank you very much for once again gracing us with your presence and delivering beyond our expectations. I think that we've all left with a great deal more understanding than we had previously. You've made very complicated things seem easier.
Thank you.
Thank you. Thank you. Now, for the next part of our speakers forum, we're pleased to have Mr. James Liu make a presentation. We've kind of laid the foundation and talked about the overall macroeconomic situation, both here in Korea, in Asia, and globally. And now we'll dig down a little bit deeper, and we'll speak specifically to the automotive industry. Now, Mr. James Liu is the managing director of Novelis China and vice president of automotive for Novelis Asia. He's been leading expansion plans in alignment with a long-term growth strategy for Novelis in Asia. He oversaw the construction of China's first automotive sheet manufacturing facility. This has helped to boost green development and emissions reductions, making it possible for aluminum to be widely used on lighter vehicles in China. Before that, Mr. Liu was president for Lysat China, which is an affiliate of BHP Steel, where he was in charge of operations in mainland China. In September of 2013, Mr. Liu was honored as the top 10 leader of China's auto parts industry and an honorary citizen of Shangzhou by the municipal government there. He was also recognized by Automotive and Parts Magazine, excuse me, as 2019 China Auto Industry Innovative Leading Figure. So it's really a pleasure to have someone as well known and respected as Mr. Liu come and address us. Again, we'd like to meet him in person, and we look forward to doing that in the future. But it's great to have Mr. Liu here, even virtually through a webinar. We're also grateful to Sachin for arranging this and persuading Mr. Liu to come join us. So thank you, Sachin, as well. With that, I'd like to turn the mic over to Mr. Liu. Thank you very much.
Thank you, Jeremy. And it's my great pleasure to join today's forum online, even though I cannot meet you in person, but I do believe in the near future, once the pandemic is over, right, we can meet in person somewhere in Asia. So also thanks to this Dr. Park's introduction presentation, because your presentation will make my presentation much easier, right? Talking about the macroeconomy for different countries in Asia, all right? So if we can move to page 4. So in my today's introduction, I will give you an overall introduction of Asia automotive market and also the impact by the pandemic and how the recovery is look like at this moment. So from Asia auto market overview perspective, from this chart, you can read, you can see there are some good news, but there are still some bad news. The bad news is that still year to date, by the end of August, right, we see overall Asia auto demand, still we see negative 21% decline versus last year, same period of time. But however, we can see a clear trend after June. The gap is becoming smaller, which is a good news to this industry overall in Asia, right? So in different countries, the situation varies. So Asia auto market definitely was heavily, impacted starting from February, but definitely we see the sign of recovery led by China and also Korea. And also in some other countries like India, right? So in recent months, we see the sign of strong recovery as well. So if we move to the next page, page 5, you can see the, content for every single month in this calendar year, right? So from China, South Korea, Japan, and also Southeast Asia market, right? The situation varies as I just mentioned. In China, China was firstly hit by this COVID-19 starting from actually January this year. But of course, that was a Lunar New Year holiday. So actually see the impact from February onwards. February, March were really challenging here in China for automotive industry. Almost all the activity stopped because of the lockdown of many cities and also many provinces all across China. But it recovers very fast after the second quarter of this calendar year. And also a very interesting thing we can see is that the bigger cars like SUV and premium brands, they're selling very good here in China. I will articulate in a few more minutes in my presentation. Then if we take a look at the automotive market in Korea, actually in general, Korea's recovery is quite decent as well, right? Even though there are some uncertainties ahead of us, but still I should say, especially the Hyundai Motors, the car sales domestically, right? It's pretty good, pretty strong. Even though, the export market still falling behind, but domestic demand is really there. For Japan and Southeast Asia, right, the situation is different. Japan dropped a lot, in terms of the demand, but its recovery is also pretty fast, supported by the local government. And Southeast Asia, there are just too many uncertainties we're dealing with right now, okay? So if we move to the next page 7, let me give you a kind of a little bit of deep dive regarding China auto market. So as we all know, the outbreak, happened in January or July from Wuhan city, did impact this industry significantly. We can see the supply chain disruption. We can see, especially for those smaller businesses, the failure. And also we can see the consumer sentiment really deteriorated in that period of time. So that caused a lot of problem to this auto market as well. So if we move to the next page, page 8, just as Dr. Park just explained, right, we can see the GDP number in the first quarter of this calendar year, and also the recovery of the GDP from the second quarter of this calendar year. And also from the right-hand side, we can read the PMI, right, actually back to this about 50 since this March this year. This is a good sign for this overall economy, and also this is a good sign to this automotive industry here in China as well. So of course, Chinese government has done a lot to push this market, right? And also the pent up, those kind of demand from consumer also pull this recovery of the auto market as well. So if we move to page 9, you can see those numbers, right? Especially after February. February is just almost nothing. Nothing happened in February, right? Which is understood. Then actually you can see from starting from April, right? April, May, June onwards until August and also September. In a few more days, we will have the August number, right? Every single month, the year-on-year growth actually is becoming kind of a positive, especially, you know, starting from the summer, right? In July and August. That for the automotive industry, by following the seasonality in the past many years, right? Normally that's a weak season, but however, there is no more weak season this calendar year in China. The car sales was still very strong in the summer season. And also, even though the year-to-date August number, we still see negative 15%, but there is no reason we cannot see the recovery of the Chinese auto market by the end of the year to further, you know, decrease this percentage to roughly about 9 to 10% in this calendar year overall. Then if we move to page 10, as I just explained, right, you can see these numbers. These numbers tell a story, right? Premium car sales in China, very strong in recent months. And also non-premium cars recovered a little bit after the summer. But you can see the double-digit growth over the last year, same period of time from the premium cars. This is an interesting phenomenon here in China. If we move to the next page, page 11, you can also see by the niche market, right, different segmentation, you know, SUV sales is very strong this year. And also the sedan sales, even, you know, recent months is growing, but the percentage is lower than the sales of SUV. This is a reflection of the Chinese consumers' preference of having a bigger cars, you know, like a SUV, especially by following the so-called second child or two-child policy in China. So families, even including the younger generation, they prefer to have a bigger car as well. So if we move to page 12, there is another very strong growth engine in China driving this automotive market with a decent growth percentage. That is definitely coming from the battery EV, electric vehicles, or plug-in hybrid EV. Even though the year-to-date number was still negative, but we can see the, you know, trend in recent months, right? It's a positive double-digit growth over the last year's same period of time. And also among all these EV players, there are a few best performers, you know, in this market, like Tesla. Tesla set up a Gigafactory 3 in Shanghai, producing Model 3, and also they're actually installing their factory, installing their equipment to produce Model Y by the end of this year. So with all these, and also some local startup companies like NIO, right, or some companies like Xiaopeng, BYD, they really push these sales of EV cars in China. And also thanks to the Chinese government's this policy encouraging those auto OEMs to switch from ICE engines, internal combustion engines, to more EV cars, right, by following the so-called dual credit system, right? So we can see even from the OEM perspective, whether it's joint venture OEM from North America or from Europe or from Japan, or even the local brands, right? They have the tendency of, you know, producing and selling more EV cars or NEV cars in the years to come. There is a kind of a stimulus behind that for sure. So if we turn to page 13, you can see the two best-selling car or models, right, in China. So the first one, left-hand side, is a Tesla. Tesla nowadays, every single week, they can produce 5,000 units, you know. So every single month, they can sell 20,000, running at the capacity of its Gigafactory 3 in Shanghai. So they have a plan to further expand their operation capacity here in China as well. On the right-hand side, you can see probably to some of you it's new, right? But the name is new as well. You know, it's a local brand, startup company, right? So located in Shanghai, Yangtze River Delta region, producing the SUV EV and also hatchback EV as well. Total, they have 3 models launched in the market. The consumers' reaction, you know, really very hit, you know. So these two actually is a kind of a, you know, representation of this startup or the EV or NEV sector, right? The care about the consumer's feeling, the know much deeper about consumers' demand or needs, right? They are much more digitalized in the marketplace, not only making their car or producing EV car, but also selling their car as well, right? They all follow the direct sales model instead of the 4S dealership distribution model in the past, right? So all these are interesting facts that can, you know, drive these two companies, different models, as one of the best-selling cars here in China from the EV and also from the overall passenger vehicle market. So if we move to the next page, page 14. So behind all these phenomena, right? Definitely, there are some interesting points, right? We can observe and also we can tell, we can share with you, right? There are 4 areas we can see these changes taking place. The first one is definitely from the, you know, the views on the consumption, right? It is changing for sure. For the younger generation, we can see more and more younger people, right? They would like to seize the day, right? Buy the nice car right now instead of wait for a few more years, right? This is their attitude, right? They like those branded names, right? Premium brands, especially in China. It's called a BBA, BMW, Daimler-Benz, and also Audi, right? For example, and also Tesla. For those senior people, right? You know, even though it's a kind of a rational consumption, but they still prefer the high quality premium brands as well, right? They spend more cautious, but they spend on the necessities, you know, for sure, right? So this is one clear trend here in China. And also another thing very interesting is that we can see an accelerated shift to omni-channel and also online shopping. For selling cars, you know, those are conventional ICE car makers in China. They still rely on the 4S dealership store to sell their car, right? But we can see more of those are startup EV sellers, right? EV makers that are relying more on the, you know, online shopping. You know, I will quote you example story next page, you know. And also the third, definitely the trend is people care more about the increased health and wellness consciousness, right? So they care more about their family and also themselves. They want to improve their living standard, quality, all these, right? That cause some, you know, new patterns of consumers' behavior or consumption, including the car sales as well. Last but not least, of course, people, you know, how to improve their working skill, how to learn, and also online education, right? After the pandemic to enrich themselves, right? This is a clear trend here in China as well. So all these definitely are the changes in consumption pattern post-COVID-19 here in mainland China I can share with you. So if we turn to page 15, you can see the photo, right? The picture left-hand side. The person in dark T-shirt, right? He's a chairman of NIO. His name is William Li, right? A billionaire in China, a new billionaire. On the left-hand side, that's a very famous TV program. You know, this is a manager. These two, they just had a chit-chat on the TV, selling, promoting their cars. And also in a very short time of period, they just sold the 320 ESA, the 7-seaters, you know, SUV, electric vehicle. You can see, definitely this is a change, right? And also from the bottom, you can see how do OEMs handle these changes, right? There are some interesting things I can share with you. So first point is definitely how to optimize the supply chain system, right? Identify the supply chain risks and also adapt to the new sales channels. This is one clear change we can see in the market. The second point is that enhance the product power, meet consumer demand for the high-tech smart cars, for example, for auto industry. Then the third one, just like Mr. William Li has done. They actively embrace those emerging marketing methods, right? Sell their cars live on the e-commerce platforms, and even promote their car on the TVs as well, right? TV programs. And last but not least, they're strengthening the financial services capabilities, right? By getting the right support from this sector as well. So all these, when it just happened, take place together, right? We can see that's one of the reasons why we can see the booming market in the short term in China for automotive sales, right? Especially for the premium cars. If we turn to page 16, let me summarize, right? China auto market situation, So this year, unfortunately, we will still see roughly about a negative 9 to 10% decrease versus last year because of the decline of the first quarter, right? So the remaining 9 months cannot catch up. But however, IHS, the forecast for next calendar year, right, compared to this year, will be a 6% positive growth. Then CAGR for the next 8 years, right, will be positive 3%. Considering this, the market size of the passenger vehicle and also the automotive market size in China, 24 million passenger vehicle in total, about 27, 28 million. This is still a decent growth in the years to come. And also don't forget, the electric vehicle production forecast, according to the industry and also those are consultant, right? The forecast roughly about 25-26% growth in the next coming years, So this will be a very decent growth that will create a lot of opportunities for this industry, right? Like Novelis, we're serving these customers by offering the lightweight aluminum panels, right? Electric vehicles, because of the driving range requirement, they do need to adopt this kind of lightweight material so as to achieve longer driving range and also less emission for ICE. Of course, that's the same story as well, right? So this is a driving force, right, for a much greener industry in the future. Not only the volume, but also the mix as well. Okay, so I think this is a brief introduction about China market. Then let me spend a few more minutes introducing this Korea, Japan, and also India market a little bit. For Korean economy, right, I will not spend too much time. You can read these numbers, and Dr. Park also mentioned about that, right? I think Korean government is really doing a very good job so far, right? So we're expecting, from the auto industry, domestic demand in Korea, right? We see the surge for sure, right? If we turn to the next page, page 19, right? You can see those few brands, definitely, they're selling pretty good. That definitely drive this the auto market versus the last year, the same period of time, right? Especially after June, right? You can see the gap becoming much smaller. The whole year, the full year, we still forecast roughly a 16% drop versus the last year. But recent months, we see the dynamic over there in the marketplace. So if we turn to page 20, right, this page explains the reason behind. We all know in Korea, right, Hyundai is definitely the dominant player in this auto market, especially those newly launched brands like Grandeur, the Avant, and also Genesis. All these models were launched in the marketplace in the domestic market in Korea. We as a supplier, major supplier for the aluminum panels, right, to Hyundai, we experienced the very strong growth, in the past 6 months, let me say in that way, after the launching of the new programs. And also, even though currently the exports still are, falling behind, but we do see, the HMC's export business, especially when we enter into the end of this year and enter into the next calendar year, right, it will recover. That's our view, especially the export to North America, the signs of this kind, the plans of this kind announced by Hyundai as well, right? So I think all in all, my view, our view to this Korea market or to HMC, right, the HMC's business, right, we're optimistic in the short term and also in the next year. But in the long run, right, that definitely depends on how the government will manage those uncertainties in front of us, right, especially the pandemic. So that's Korea. if we move to page 22, that will give you a taste regarding the Japan market, right? We can see the significant drop after the pandemic outbreak in Japan, right? After this April, right? But the good news is that the recovery after the summer, after July, is really catching up. So the August gap versus the same period last year is right. It's just negative 16%. You know, and also from what we can see and feel, right? Recent months, September, is further recovery. So the whole year we can see it will witness negative 25% decrease, but the initiatives being taken by the Japanese government that will boost and also pull back the demand, because they will set more aggressive production plan from those OEMs we can see, whether it's Toyota, Honda, or Nissan, right? That's a good news overall to Asia, right? So of course, if we turn to page 23, right, we can see the mix and the details, the reason behind. This year we will see negative growth, but next year will be positive 6%. In the years to come, Japan market will be quite stable, right? And Japanese market, the share of the premium segment, just like China and Korea, right, is more than half, roughly half, 60%, coming from the premium brands, okay? Then last but not least, while ICCK, right? So I have to introduce the Indian market a little bit, right, to share with you some information, right? Otherwise, there is no I in our meeting, right? So Indian market is very interesting, right? We all know that. You take a look at the bar of April, right? Surprisingly, that's 0 this year.
Yeah.
Probably Sachin, you know this better than
Yeah.
I do, right? So
Absolutely.
it stopped everything, the pandemic, right? But you see the recovery, it's really a decent recovery in recent months, right? So all in all this year, we will see negative 43% decline versus last year. But if we turn to the next page, you will see the recovery from next year will be a very decent 24%, reaching this 3.7 million cars to be forecasted by IHS. And also in the years to come, we can see this demand and also production, of course, will be steadily increasing from around 4 million car to above 5 million in the next 7-8 years. This will create a lot of business opportunities for many companies, including Novelis. Because on the right-hand side, you can read the market structure in India, right? Passenger vehicle I'm talking about is slightly different from that in Korea, Japan, and also China, where you can see the premium car consists majority. But in India, it's about 20-22% in the years to come. But even though this will represent a huge golden opportunity for the companies like us, because India will also manage the CO2 equivalent emission in the years to come, right? India government is also pushing hard to manage all these emissions in the whole lifespan from end to end, right? From the automotive industry. And also 2 years ago, I went to Delhi, right? On behalf of Novelis, presented our Novelis aluminum solution, right, to the Indian automotive industry, right, introducing those kind of material solution and also those application solutions, right. We see the opportunities coming from Tata, coming from this Mahindra for sure, right. So with that, I think that's the story for India. So if we turn to the last page of my presentation, page 27, as you all know well, Novelis is serving global auto market by supplying those premium aluminum lightweight solutions, right, to OEMs and help them reduce CO2 emission and also its impact to our environment. Novelis has a purpose. I think that's also meaningful for this forum as well, right? We need to shape a sustainable world together, right? So that's exactly what Novelis, not only we say so, but also we are doing so. So with that, Jeremy, I will start my this introduction presentation here and inviting questions if you have. Thank you.
Thank you, Mr. Liu. It was a fantastic and insightful presentation, right?
Thank you.
Really a treat to have you here. Do we have any questions? You can either ask directly or you can send a chat question.
There is one question in the chat box.
Yeah. Let me see whether I can see that message or not. Oh, the first question is, what's the market ratio between PV and the EV in China? So actually nowadays, right, the EV share in China is roughly about 4%. But we can see in the years to come, right, this ratio will be increased to roughly about 25% in about 5 to 7 years time, according to the IHS forecast, and also China Automotive Industry Association's forecast. So the second question is, when do you expect EV can surpass PV, and when to replace completely in the end? My personal view, probably that's also Novelis' view, right? We don't believe EV can replace 100% completely the PV, right? Because the application under different scenario, right? Different consumer will prefer different, passenger vehicles, right? But we see the EV's percentage will be definitely increased in the years to come. But however, PV will still be the dominant, passenger vehicle form, at least in 10 years time. That's our view, right? But of course, in addition to consumers' pool, right, consumers' preference, there is another force. That is the government's push, right? Especially in China, we're talking about the MIIT, Ministry of Information and Industry Technology. There's a policymaker, right? So depending on the dual credit and also the CO2 carbon policy in the years to come, right, this portion might be changed, influenced significantly by this MIIT's policy to be published in the years to come.
Thank you. There's one more question in the chat box regarding NIO. Are you able to see that?
Yeah, I'm reading that. Only today I have come to know about NIO. Have they begun exporting to other countries? If not, when do you think it will be? So NIO actually started their business in China, because they believe they need to firstly produce a first-class quality car in China, right? Most reliable cars in China first, as a first step. But however, I can share with you right now is that from the next calendar year, NIO is planning to export its SUV and hatchback EC6, the model is called, totally 3 models into European market as a first stop. So with that, I think step by step, they will consider North America and other countries in the world as well, but definitely it's not in the short term, but maybe in the years to come, especially if the plan to export the car to North America, right? From the legal perspective, there are a lot of implications that need to figure out. Selling in Europe is relatively easier because they have a design hub in Munich, in Germany, right? They have a group of people over there that understand the local regulations much better than they understand that in North America, right? So that's our current plan.
Great. Any other questions? Last chance.
Thank you, Mr. James Liu. Yes,
My pleasure.
I have one question about that. I'm just curious about in the sector of the auto. There's some good, the market is there in China, but in Korea is also the modern technology is the grow very fast, and then still using that auto parts. For example, like the car body or chassis is using that the steel there, but now it changed like aluminum there now, and then the next generation is that mentioned about the carbon fiber, something plastic, something like that. And so in case, do you think Novelis is also using that aluminum parts, and then the market, the technology when change, and then what influence is that kind of, the increased technology that we have still the electric cars. Electric cars also, they need some a little bit the lighter, the prefer to lighter than heavier, and that all kind of things. I'm not professional at auto parts, so I want to know about what something to change the kind of trend and then that kind of things. Thank you.
Thank you. You asked a very good question, actually, a very professional question. Let me answer your question in this way, right? So the auto markets has been evolving all the time, right? And also the auto market has developed its technology material application since 100 years ago, growing the auto market together with the steel material, right? We know steel is still the dominant material being used in the auto, whether it's car body, chassis, even some for electric vehicle batteries as well, right? But however, especially with a lightweight technology, fast growing, right? And also the government's requirement to further reduce the CO2 emission for ICE cars, for engine cars, and also for these EV cars to achieve a longer driving range, right? The lightweight demand in front of each OEM is really there. They stand a huge pressure to achieve a lightweight effect for their cars or their fleet, not just one model, but the whole model, right? So there are regulations of this kind all over the world, in North America, in Europe, in China, and also in Korea. So everybody needs to follow. So coming back to the technology, conversation, right, on this topic, there are different materials that can help OEM to achieve the lightweight. Steel can also make ultra high tensile steel to achieve this, but there's a limit. So that's the reason why aluminum material kicks in and play a ever increasing more important role in the automotive industry. Because of the aluminum's nature, material nature, right? It can be easily formed, very light. The density is only 1/3 of steel, and also can be welded, can be joined, can be stamped, can be painted, right? Can be adaptable to steel material as well. All this nature, right, that decide aluminum is widely used in the automotive industry to help them achieve the lightweight agenda. And also there's another very important factor, don't forget, aluminum is a material that can be recycled all the time almost, right? When we recycle the aluminum, the CO2 equivalent emission will be much, much smaller for the whole society, not only for us as an aluminum manufacturer, or not only for this, auto OEM as a manufacturer of auto, but also for consumer as well. Because when you drive the car, your car emission or the electricity consumption will be much lower, right, than before. That's another reason. So that's the reason why we see the lightweight materials application, right, is really developing very fast. You mentioned about the carbon fiber. You also talk about this aluminum. We also talk about the high strength steel material, right? All these are the right solutions, for different OEMs that picking different metal or material to fit for their own needs, right? So that's the reason why, the last but not least, I can share with you is that Novelis, we had set up this R&D and customer solution center in Asia, catering for this kind of demand. We not only produce a metal, but also we're starting from the beginning of our car design to work very closely, seamlessly with the OEM, like HMC in Korea, right? To help them how to use this kind of material, how to design, how to simulate, how not only design, right, but how to make a car using this metal, right? And how to do the after sales service, right, in front of the consumer. With all these one-stop solution, I do believe the lightweight material, especially aluminum, will see a much brighter future in the years to come, including in Korea as well. Thank you.
Thank you very much. Thank you very much, Mr. Liu. That was fantastic. Well, with that, I think it's time to wrap it up. Thank you so much for joining us from Korea, from India, from China, and maybe from other places as well, and spending some time with us. We're glad you could make it. Thank you very much also to Dr. Park for coming and giving us a great speech. Sachin, is there anything else that you'd like to say?
No, thanks. Thanks, Jeremy. I just wanted to thank both the speakers for their fantastic speech, a fantastic presentation. Really enjoyed it. Thank you.
Thank you all, and we'll keep you posted on future developments and future activities, either online or in person. Have a great afternoon or morning.